Hey guys, it's Will. I thought I would do a video on a few stocks and sort of each time I talk about my methodology. And if you've watched other videos, you might hopefully get a sense of what I'm looking for. And I've talked about stocks like FUTU and they're doing really well. So you can go back and look at what I talked about. Not all stocks are going to go up and stay up forever. So, the window of opportunity is short sometimes, but other times, the stocks keep going up for a while and you can just stay in those trades. So I'm using TC2000 here, and I'm going to talk about how you can find these opportunities instead of just clicking around looking at charts and stuff like that, because sometimes you don't have a lot of time to get in on the ideal trade. So if you want to get a free trial or get a $25 off coupon, you can check out the link in the description below. I have the gold plan and I have US real-time data, so I can see the stocks in real time, like the prices and stuff like that. And right now it's pre-market on Monday, January 25th. So you actually see, this is here 750. You see the prices that are for the stocks that are showing prices in pre-market. So that's great as well. And these are pre-market percentages, values as well. And so you'll see the stocks are changing. Some things don't change right now, like ETFs early in the morning. Some of them don't change, but other things, a lot of stocks are trading already. So you can see that. So I mentioned FUTU. If you look back at my video from probably over a week ago, you can see what I'm looking for is a break of a downtrend or a pullback, or a breakout from like a flat base or a long sort of flat period. There's also opportunities to buy in an uptrend when it gets close to the 8 EMA or the trend line. Like if you draw a straight line going up like this, if I draw a line, so TC2000 has these little palette area here, and you can put text and draw lines on it and other things as well. So like right here where you got close to the trend line, you could have bought in on that at that spot. But what I'm mostly looking for, the earliest entry and lowest risk type thing, is usually a breakout. It's a bit congested right here, so I'll turn off some of these lines. There's some helpful information that confirms the idea that you have of a breakout, and that is there's these red dots and green dots, and those are volatility stops. And they use the average true range. So basically, they take into account the range of the prices during the day. So when you see it change from green to red, that's a good, generally a good spot for an entry. It's not perfect. It's just a general idea. Sometimes you can get in sooner if you wanted to, but it's a very good indicator that way. You can also use that as a stop loss. So you can see here that it moves up. Sometimes it's above the 8 EMA, it's close to the price. You can adjust the values within that volatility stop, but you can see that you can ride it up. Now what happens when the stock goes up more steeply, you're going to be up quite high up off of the 8 EMA, and that will lock in more gains, but also potentially stop you out sooner. So it works pretty well. Another thing I look at is the MACD, or price percent oscillator, for like a crossover. Right here you can see that it was a good spot, and when it's above, when the MACD is above the moving average, you're in a good uptrend. And then you have stochastics. They have value, limited value. Usually when you have a breakout like this, you'll see stochastics rising, but just because it's down in an oversold area like here and here doesn't mean you buy it instantly. So you're not doing it in isolation. But when you start to see, if you're looking here like at a breakout area and you have a rising stochastic, that's a pretty good thing. So if you look at it, like I said earlier video, you'll see that I was talking about that breakout. If we go to BlackBerry, I'll turn off the writing as well. We have a similar situation. So if you're looking at a stock and you see this flat sort of period, and it's also looking like it's supporting at the 50, which is good. So if it stays above the 50, some people just buy when it gets to the 50, but I like to see a start, you know, of an uptrend. So you can draw like a vertical line across the tops of the stock and look for a breakthrough. Once you have that breakout, you could buy here, and then you see this explode. You don't know that it's going to do that if you buy early like here. But if you wait and you see this big candle breaking out above this spot, that's a good indicator. Some people look for a horizontal, like if you hold the shift bar down, you can draw a horizontal line. They look for a breakout from that previous high, like that, and then they get in there. So there's different ways to enter, but that one's doing good. Palantir, you can see that I drew this downward sloping line. So I had an amazing run like this. And once you see this, you can see that you might be tempted to buy when it breaks up again off here. But if you give it time and you see that the MACD is declining and down, like it didn't quite make it above the moving average, it's still in this downward decline all the way down to right here. And so this is the spot that confirmed with the MACD crossover. And what you want to do in TC2000 is put an alert on that line. So it doesn't, when you draw a downtrend line, it projects that into the future. So when you right click on that line and you say set alert, and you say when it crosses that line, okay? And so you'd want to get in the day that it crossed that line, which I think was Friday. Another thing you can do more generally is use an alert or a condition, and also alerts, but condition on a crossover of the MACD or price percent oscillator. So when you right click, there's a little arrow beside it, and you say create condition, and then it says when it's greater than, but you could put greater than 0, but what I'm going to do is look for a crossover, crossing up the moving average like this. And then you save it as a condition. And then you use that condition when you're scanning stocks. So on Friday, each day you could scan the market and you would see a cross, look for a MACD cross. There's other things you could do. You could look for increasing derivative oscillator. So this little bar chart here. You can look for increasing values. You can look for a break of a recent high, for example. So, but like I said, if you have certain stocks that you like, high quality stocks. So if we go to NEO, you can see I had this line right here. So I put an arrow sometimes. There's also an arrow in this palette. So once you cross that line and you see the PPO or the MACD crossed up here, you could enter there. And then you see that the volatility stop could be used. You might have got stopped out if it gets really close. A couple things you can do. You don't have to use a hard stop, like a physical stop loss in wherever you're buying your stocks. You can use them. You can just look at it visually, is one aspect. The other thing is, worst case scenario, if you get stopped out and then you start to see it come back, you can buy back in again. The other option is if you have, if your volatility stops are close to like a moving average, like this is the 21 EMA, you can just use that instead of the volatility stop. So, you don't have to use the volatility stop as a stop loss. So you will get stopped out sometimes. If you use the 8 EMA, you would have got stopped out, and then when it crossed back up, you can get back in. So it's not the worst thing in the world. If you got in here and you made a gain, and then you start your next thing, it's not a bad scenario to do that. XPEV was one that was good recently. It's another electric vehicle. You can see how I draw this downward trend. It's also confirmed with a volatility stop. You can also do a condition on a volatility stop by saying that the price is above the volatility stop. So if the price is above, that means it's green. And if the price is below the volatility stop, that means it's red. So you can say crossing up, which would mean switching basically from red to green. So I mentioned MACD crossover. So if you look here, you have a MACD crossover. A little bit sooner, you had the green dots. If you're drawing trend lines, you might have waited a bit longer for it to break through. So here's Airbnb. You had a initial, like, I don't like to buy initially. There's not really any data. I want to see what happens. It came up, came back down, went back up. It broke out. So sometimes buying a breakout will fail. You see here how it broke up because you're quite high up off of the trend line. So one of the problems with buying breakouts is that a lot of times you're up above the trend line quite a bit. So the risk, there's a bit of risk there. But what happens sometimes is it breaks out, pulls back, and then supports. So people see that there's a support here at this 21 EMA, and then you can get in there. But of course, now you have this potential resistance here, like this. So the initial breakout didn't quite work. This one is currently poking off this. If it breaks through there, or pulls back to the trend line, you could be a potential purchase. So I hope that helps you guys. If you want to get a free trial, like I said, of TC2000, check out the link in the description below, and a $25 off if you purchase. I appreciate everyone who's already signed up. There's quite a few of you who have decided to pick this up, and I hope you're enjoying the software. If you have any questions or want me to talk about something specifically with TC2000, I can try to help you guys out. All right, talk to you guys later.